As passive investing is gaining popularity, more and more robo-advisors are popping up in the market. A robo-advisor will manage your money and it will invest it for you. A lot of big financial companies are now offering these kinds of services. So, what are they? And are they worth your time and money? Well, join the Money Network and let's find out. What's up everyone, my name is Joris, welcome back to the Money Network. With these extremely low interest rates and huge inflation numbers, people are finally starting to realize that money on their bank accounts effectively costs them purchasing power. More and more people are looking for a way to earn more return on their saved capital. And as a result, a lot of them find their way to the stock market. But the stock market can be a very confusing and challenging place for those that don't know where to look for information or for those that don't have the time to look for information. Those people can be helped by private banks, but those require very steep entrance budgets. If you want to get helped by a private banker, you'll have to have at least 250,000 euros at your disposal. Some other banks won't even look at you if you're bringing less than 1 million euros to the table. From a business point of view, this private banking threshold is very logical. It is expensive to have a private banker, to help you personally. And if you're only bringing a few thousand euros, well, the fees will never cover the costs of the bank. And this is where robot-advisors come into play. Matti, Lucy, Birdie, Curvo, Dexy, the choices are endless. These are the names of some of the robo-advisors on the Belgian market. But which of them is the best? Stay until the end of the video to get a clear overview of all the pros and all the cons of the different robo-advisors. First of all, let's look at what a robot-advisor really is. According to Investopedia, a robo-advisor is a digital platform that provides automated, algorithm-driven financial planning services with little to no human supervision. First, you're asked a few questions about your financial situation and your future goals through an online survey, and then that data is used to offer advice and your money gets invested automatically according to that plan. This definition is a bit misleading because in practice these robo-advisors will not give you actual financial advice. They offer you portfolio management by supplying passively or actively managed funds. The companies behind these robo-advisors will compile a portfolio for you, in line with your already filled-in survey, and they let you invest in that portfolio only. In the end, robo-advisors allow people with limited knowledge or limited interest to invest in the stock market. They offer diversified funds and provide a very easy way to save money for your retirement. And best of all, they are gaining in popularity fast. I recently spoke to one of the founders of Curvo, and they told me that their client portfolio has been growing exponentially ever since they introduced their investment app to the big public. It is great to see that incentives like these emerge and they help everyone during their first few steps on the stock market. Much like most robo-advisors, Curvo offers the option to invest in your personalized fund monthly by an automatic bank transfer. These transfers are popular and are gaining traction very quickly. Basically, you're transferring money every month automatically and it gets invested without your saying. I'm not affiliated with Curvo, but we have collaborated in the past. They have interviewed me to ask about my investment journey and my investment ideas. If you're interested in that video, I will link it in the description below. Now, as I said before, there are so many robo-advisors. So which one should you take, if any? First of all, pose yourself this question. Do you want to do all your investment research yourself, or do you want someone else to do it for you? Because as you know, if you do something yourself, you can save a lot of money. The more you ask others to do things for you, the more you will pay. But if that is no hurdle, then we can look at the major positive points of robo-investing. First off, the starting amount. As said before, private banking won't help you if you don't bring 250,000 or even 1 million euros to the table. But robo-investors can be a great alternative for the lower starting amounts. But how low? Well, some robo-advisors already start with 50 euros and others have a starting amount of 1,000, 10,000 or 15,000 euros. It really depends on the company that is behind that particular robo-advisor. Birdie, for example, used to have a 1,000 starting threshold, but they have actually lowered this starting amount to 50 euros because the 1,000 euros was still too high of a starting point for some of their clients. And this is very reasonable because the potential clients of robo-advisors are people that have not invested before and they want to set a few very precautious first steps in the stock market. They are not fond of investing 1,000 euros in one go if they have never done so before. On the other hand, 50 euros to start off is way less of a problem. This lower threshold also opens the stock market to students who don't even have a recurring income, but they are willing to invest in the stock market. Apart from the initial investment, most robo-advisors offer fractional investments, which means that if you are able to transfer 10 euros or 20 euros every month, it will get invested in your fund. No money will be left behind. This is a great way for people who don't have much margin to invest, so they can actually start investing nonetheless. If they save a few euros here and there, they can still start. And secondly, another important point of robo-investing is the investor's risk profile. As said before, the survey filled in will indicate how much risk you can and how much risk you want to handle. According to this information, the robo-investors will offer various options to invest in, which are all composed of a certain percentage of bonds and stocks. The more conservative your risk profile turns out to be, the more bonds will be placed in your portfolio. And the more risk you are willing to take, the more stocks will be there. Apart from that standard diversification, some robo-advisor platforms will also allow you to invest in sector-specific investments, in sector-specific portfolios. For example, investments made exclusively in the biotechnology or technology sector. Very important to note here that these types of portfolio are always less diversified and they carry a bigger diversification risk. If you're not willing to research these sector-specific markets, these kind of investments should be ignored. But what you should investigate is the difference between the different robo-advisors. Not all of them offer the same sort of service. Some are a lot more expensive than others, and some offer a lot more variety than others. But don't get fooled here. Often simplicity is key. Here's a quick overview of all Belgian robo-advisors with their required initial investment amounts. In the second column, you will find the starting amount for the different portfolios. All of the advisors offer different portfolios for all of the risk categories, and some advisors add portfolios for very specific market segments. But again, this will increase the risk of your investments. Some robo-advisors, like the one of Saxo Bank and the one from KBC's Bolero, offer personalized portfolios. At their backend, they have up to 20,000 different combinations. Every portfolio has a certain amount of trackers or funds underlying, but here simplicity is key. If your portfolio is diversified globally, there's no need to have a lot of underlying funds. In the column after that, the table states what kind of funds can be found in these portfolios. All of these funds are composed by major investment houses and they are top of class. And one last very important point are the yearly fees. This total fee consists of the management fee and the running costs of the underlying funds. The difference between the different options does not seem to be a lot, but a difference of 0.5% will add up over time. Paying more is basically lost profit every year. If your fund, for example, manages to give you a return of 5% on average, a difference of half a percentage point in fees is actually 10% of your return. Keep that in mind. So, is robo-investing at all useful here in Belgium? I'd say yes, it's great. Robo-investing opens the stock market to the big audience and allows people with very limited capital to start working on their financial freedom. As you remember, investing is a waiting game. So the sooner you start, even if it's with very limited amounts of money, the better your result will be. Other positive points about robo-investing are that you have no influence on the investments that have been made. You have to fill in the survey at the start and let the portfolio invest itself. No stress and no research needed. The investments are often linked to possible automated bank transfers directly from your checking account. That way you don't even have to worry about transferring money at the start of every month. It will be taken out of the account automatically. This way you will never forget to invest again. This is also great to combat the idea of timing the markets. If you don't follow the markets whatsoever and you just invest regularly and completely automatic, there's no debate in waiting on a good time to buy or sell. Another positive point is that all costs are gradual. Every fee is a percentage, so there is no real difference in investing 50 euros or 5,000 euros. You'll always pay a certain percentage on your investment. No fixed costs at the start whatsoever. This is a huge advantage over investing on your own, where you're often faced paying fixed broker fees that can be very expensive when you're investing very small amounts of money. But having no fixed broker fees can also be a downside, because it often results in higher running costs. Robo-advisors are quite expensive compared to doing the investments yourself. But this is just my personal point of view. Compared to private banking fees, robo-advisory is rather cheap. It really depends on your point of view. So what are your thoughts? Do you invest via robo-advisors? Why or why not? Let me know in the comments below. Let's get a conversation started. And as always, we thank you so much for your support and for watching this video. If you have enjoyed this video, please consider liking it and sharing it with a friend to share the knowledge. Make them join the Money Network. It helps grow the channel and helps spread the knowledge. We thank you so much for watching, and until next time.